Good morning, everyone. Today we're going to talk about how to manage risk. One of the things that all of you need to work harder on, or not necessarily harder, but pay more attention to, is risk analysis, risk assessment, risk management, risk control. The professional traders are always controlling their risk. They mitigate their risk by having legs on their orders of million, 5 million, 10 million shares, and they may be buying it incrementally or all at once. But they'll have option puts, as I've mentioned before, that they use. They do not think that their stock is going to go down. They know they're pretty confident that it's going to go up. But just in case something happens in the market, because it's like the weather, it changes every single day, and they're always on top of what's going on in the weather of the market. How are retail traders feeling? What are small funds managers doing? What are odd lot traders doing? We have a lot of odd lot investors and odd lot traders and new traders coming into the market right now. And they create a lot of speculation and momentum and all kinds of things, but they can be a hairball because they don't know what they're doing. So the first sign of the stock losing some money, they panic and sell, and that can cause all kinds of conflicts with the charts and what we want them to do or expect them to do in the near term. We're not predicting. You might as well get that out of your vocabulary because it is a very bad word. We are forecasting like the weathermen. The weathermen can forecast. I'm in the Pacific Northwest. We're in an atmospheric river flooding down, and so we are really experiencing that. And the forecasters are doing an excellent job of forecasting what's going to be happening each day. But they can't forecast what's going to happen 3 weeks from now or a week from now. They do very well short term. That's what you rely on when you're swing trading or day trading or even position trading. You're relying on the forecasting, not predicting, of what's going to happen. We have a nice sideways action that broke out and moved up. It's over speculated. The angle of ascent is too steep to sustain. So it's either going to go sideways or it's going to go back down into this fundamental zone. This is a fundamental zone. I've talked about that. So when you're calculating your risk and you see a little entry here, you want to calculate how far can the stock run if it's at a new all-time high or if it is at a resistance level that is not showing up on your daily charts. It shifted sideways, which is a very positive thing for it to do. It has 87% of all its outstanding shares held by institutions, so they're heavy in the stock. And the stock is a semiconductor that is not as well known, but we know that all the guidance coming in from the corporations, CEOs, have been saying that they are expecting growth for fourth quarter. So some of this stuff is coming up. So it's very speculated, but there's pro traders in this mix. We also see that this is at a new high here, so there is some risk there. You want to calculate your risk. How far will the stock correct if it goes down? And how far can it run up if it explodes and runs up again? That is support and resistance. If we look on the weekly chart, we can see that there's tons of support right in here. This was a previous all-time high, and there's tons and tons, I believe, and this is tons of support right here. We can look at the monthly chart and make sure that I'm correct on this. Yes, it is at a new all-time high, and that is marvelous, and most of them are. So we're going to go back to the weekly chart. We're going to say, oh, wow, this stock had a nice consolidation. It reacted to the flash crash in April, came right back up, and is now doing a nice wide sideways pattern. And we can see that this is within the range, and then it moves up. So that's important. Sometimes I know a lot of you like to just stay on the daily chart, but if you check the weekly chart, you can get some more information. And you also want to check the monthly if you're not sure that you're at a new all-time high. So this is at a new all-time high. It has to consider what it's going to do. So this is a tight price range. So probably the run gain potential, since there is no resistance above price, what would the run gain potential be? How do you calculate that if it's at a new high? Because you must calculate how far can this stock run until it is hits another resistance level. Well, there's a cute little way of doing that, and that is its price. Whole numbers are a resistance factor. Professionals tend to move out of a stock price when it hits a whole number. We're not quite sure why, but it does work fairly well. And so you would be calculating this on a new high on a whole number. So 280 or 290. This is also based on a lot of other information, including the indicators that I teach and so on and so forth. So this is just part of the formula that I'm talking about today. But this is important because it tells you, okay, how far can the stock run? Well, it can run either about 5 or right now it's right here. So we're looking at about 4 or 5 points. Or if it goes to 290, it could run much further. And that would be a pretty good swing trade for it to run up. I like the tight consolidation. I like the fact that this is patterning down a little bit because it was excessive. But if we have a shock and awe happen, if something comes into the retail news and everybody, the odd lotters, the new investors, the new traders, all panic and start selling in fear, this stock will run back down and probably breach and come back into this strong support level. Could stop here or about here, depending on how much of the non-event panic is created. There's support right here from here, and that's really good. So we have a very solid support level here for this stock. So you also have to place your stop losses well below this sideways. If you tighten it too tight, you will get whipsawed out. And I can almost guarantee that because the HFTs and the pro traders and everyone else knows that use percentage stop losses, which is not a good idea in the millisecond market. You want to be at support levels because this is what the pros use. They use support levels. They get their stock price and they use a controlled bracketed sell order, and it's a sell at market if it's going to hit that. So you're out quickly. And you want to have it low enough so that the stock can do what professionals call breathe. The stock is breathing right now in between these two price actions. So right now, the support level should be below about here. It has to be calculated. I'm just guessing here because I don't have my trade management planner out so I can plug in all the numbers and get this stuff spit it out. I love my trade management planner. It's a monthly analysis of what's going on in the market and how you to trade it that month and how much money you can make based on your capital base. So a lot of my people use this. So and then this would be your entry point. You place it a little bit above. What happens here is that it wouldn't take a catastrophic loss, shock, or thing for it to trigger your stop loss. Right now, this is holding really well. If it was curving down or starting to come down further, then we would know that it would come into the support level. There's a lot of analysis going on here. When you have super high volume, you have HFTs in the mix, right here, and HFTs in the mix right here. Pro traders like to do smaller nudges that trigger the HFTs, or the high volume can also come from small funds managers and memes groups that are trading all at the same time at lunch. So you have to calculate how much risk am I taking versus how much profit potential that can I have. And you have to calculate your risk based on not, oh, I'm going to set it at 25 cents because then I feel good about that. You're going to be wiped out and you're going to take a big loss because they can see that and they know that. You have to base it upon the technical patterns appropriate for that each and every stock you're trading. Don't use percentages and don't place it too tight because you will be whipsawed out. And then you'll say, oh, stop losses don't work. Yes, they work, but you have to place them as a professional would place them, which is well below the low of the support level that it's currently in. You have to give the stock room to breathe. It may tick down a day or two here, and you would get wiped out if you were really tight right there. So you have to be careful how you place your stop losses. You also have to only trade stocks that you can tolerate. If the risk is scaring you and you want to move it tighter, don't trade that stock because it is too high of a risk for you to trade. You must have a risk tolerance level, and you must not be scared to have a stop loss and a position that will allow the stock to breathe. I'm Martha Stokes, and that's the topic for today.